Good afternoon, everyone, and welcome to another episode of For Our Financials Financial Forum. Today, we will begin as usual with markets in motion, and then we will do our second segment, which will be finance in focus. And for today's Wealth Wisdom Corner, we're going to be talking about LLCs versus S-Corp. So, making sure everyone understands the differences between those two things and how we're going to use them. So, without further ado, we will get started with our first section, markets in motion. Man, Jeff, I tell you, volatile might be the understatement of the week, as markets
Mhm.
were basically reacting in real time to every headline coming out in the Middle East. It felt like every few hours there was a new development, a new statement, a new strike that sent sentiment swinging back and forth.
Exactly. I mean, you could see that by the numbers. So by the time the dust settled, I think the S&P 500 was down almost 2%. The Nasdaq was off just over 2%, and then the Dow was lost a little more than 2% as well. Then even our overseas markets weren't spread as they dropped about 2%. It was just one of those weeks where investors were trying to keep up with the news cycle more than the fundamentals.
Exactly. And what's interesting is that the week started on a pretty hopeful note because stocks actually had rebounded early on. Oil prices eased a little bit, and investors were doing that classic dance. One eye over here on potential bargains, and the other eye was glued to the Middle East. There was even some optimism around reports that a coalition might step in to escort tankers out of the Persian Gulf.
Right. And for a moment, it looked like markets were willing to look past the tankers attack near the Strait of Hormuz. And that's no small thing. I remember roughly 20% of the world's oil exports moved through that narrow passage. But then we got that hotter than expected wholesale inflation reading, and the Fed held rates steady. And that combination took the wind out of the rebound. So,
Yep, and then by Thursday, you could actually feel that shift because optimism about the strait reopening started to fade. The
hmm
stock slid again. Not dramatically, but enough to show that investors were losing their patience. We did get a little late day relief rally that day, but it didn't hold into Friday.
yeah. And then Friday brought the big headline. Iran declared force majeure on all foreign owned oil
Mm.
fields. And that was the moment the market said, okay, this is going to be a long-term disruption, and the stocks are open lower, and stabilized midday and then rolled over again as the news hit. So,
Yep. So, yep, the markets. That's just where we are right now. Is everything is focused on the Middle East. We'll continue to monitor that, report what's going on, how it's impacting the markets as we try and move forward. As you know, Jeff, we're rebalancing portfolios again today. Trying to
yep.
just keep up with this topsy turvy world that we're dealing with right now. So just trying to keep
hmm
people's money protected on the sidelines and a little bit of safety while we kind of get through this tough, volatile time.
hmm
Yep. So that'll do it for our first segment, markets in motion. And on the other side of the break, we will return and begin our next segment, which will be finance in focus. See you then.
Long-term care isn't a fringe scenario. It's not rare. For most retirees, it's a statistically likely event, and one that can reshape finances, family dynamics, and long-term independence. The emotional impact is real. The financial impact can be devastating. That's why Friar Financial builds retirement income strategies that prepare for the realities of long-term care, not the wishful thinking. Because planning ahead protects more than money, it protects dignity.
Okay, we are back from our break and ready to begin the next section, finance in focus. Let's pivot over to the Feds because they were part of the story too. The Fed Reserve kept the Fed funds rate at 3.5% to 3.75, and Chair Powell was pretty candid. He said inflation just isn't cooling as quickly as they projected. And when Powell says something like that, the markets tend to listen.
They do. And then the Fed's updated dot plot, which is basically the roadmap of where voting members think GDP, inflation, employment, and rates are headed, and left the door open for a rate adjustment later this year. So not a promise, but definitely a possibility.
Yeah. Meanwhile, the energy market was in its own world. Saudi officials
hmm
floated the idea that oil could surge past $180 a barrel if these disruptions continue into late April. That's not a forecast, it's more of a warning. but it shows how fragile the supply picture is right now.
Yep. And then on the geopolitical side of the energy story kept escalating. The White House is reportedly considering options as extreme as blockading or occupying Iran's Karg Island to pressure Tehran to reopen the Strait of Hormuz. Iran, on the other hand, is selectively allowing certain ships through
Hmm.
to show dominance and reduce diplomatic isolation. So,
That they have. And then you have the angle from Qatar, because Iran
hmm
strike on the Ras Laffan LNG plant could cost Qatar Energy $20 billion a year in lost sales. That's massive. And then
mm-hmm.
the LNG importers, especially in Asia, are already turning to U.S. suppliers to fill the gap.
Yeah. And then speaking of Asia, they're feeling the squeeze the most. I think refined product exports out of the region have fallen sharply over the last 10 days. Jet fuel down more than 40%, gasoline over 30%, and then diesel over 20% as well. And this isn't demand falling because people don't want the product. It's falling because the inputs just aren't there.
Exactly. You got Asian and European steam crackers rely heavily on LPG from the Gulf, from the Persian Gulf, that is. With those supplies
Mhm.
tightening, shutdowns are already happening. Asia sources more than half of its naphtha from the Middle East. So they're the most exposed.
hmm And then on the corporate side of things, kind of as we dive into that, we saw a mix of resilience and caution. Um, FedEx beat expectations and raised guidance, saying the Iran conflict should have only been a muted impact on their operations.
Yep, Unilever is exploring a separation of its food business and potentially combining it with McCormick. Airlines are preparing contingency plans because of the jet fuel shortage fears. And in tech, NVIDIA continues to dominate the conversation. They're planning to sell 1 million GPU chips to Amazon's cloud unit by 2027.
And Amazon also acquired a robotics startup to boost delivery efficiency. And Jeff Bezos is reportedly in talks to raise $100 billion for a fund focused on buying manufacturing companies and accelerating automation. And Tesla is looking to purchase nearly $3 billion in solar manufacturing equipment from China as well.
Yep. So this is what we're watching this week. Kind of a brief economic calendar, but on Monday we got construction spending. Tuesday, the productivity report. Wednesday, import prices. Thursday, the weekly jobless claims, and Friday, consumer sentiment.
And then on the earnings side, it's a little light but notable. Wednesday we got Centus, and then Friday we got Carnival. So a
Yep.
little light on that side, but big names still.
Yep. So, Jeff, I think the big theme this week is that markets are trying to price in uncertainty, not just economic uncertainty, but geopolitical uncertainty that changes by the hour, seems like.
Absolutely. And then when markets are reacting to the headlines instead of the fundamentals, you tend to see these sharp swings. I mean, it's a reminder that staying diversified, staying patient, and staying focused on long-term goals matters more than ever.
Well said. And as always, we'll keep watching the data, the Fed, and the developments overseas so our clients don't have to. So
Mhm.
that wraps up our finance in focus section. We're going to take another quick little break, and then we'll see you on the other side of the break to talk about our Wealth Wisdom Corner and LLCs versus S-Corps. Stay tuned.
Most people focus on average returns. But in retirement, averages don't tell the story. What matters is when returns happen. A few negative years early in retirement, combined with withdrawals, can permanently reduce a portfolio's ability to recover. That's sequence of returns risk, and it's one of the most misunderstood threats retirees face. Friar Financial's dynamic retirement income strategy is built to help protect your income from the timing of market returns, not just the numbers on a chart.
All right, welcome back. And now we'll kind of dive into our Wealth Wisdom workshop, and kind of like Marcus said at the beginning, today we'll be going over LLC versus S Corp. And I think the biggest thing that we probably should say up front, Marcus, is what you said at the beginning, to reiterate that, is that an LLC is a business structure versus an S Corp is tax treatment. So it's a tax election. And I think that's a common misconception we kind of see on the internet and social media when people are talking about LLCs versus S Corp. So and we'll kind of dive into both and kind of give the definitions and explanations of it all. So we'll start with an LLC, and the simple stuff is the LLC stands for limited liability company. And LLCs are extremely popular because they offer liability protection for the owner, operational flexibility, and then simple administration than a corporation in many cases. A single member LLC is usually taxed as a sole proprietorship, and a multi-member LLC is usually taxed as a partnership, and then profits generally pass through to the owner's personal tax return. Like I said, just to kind of reiterate, that's where you see the LLC as a business structure and not that actual tax election, because it can be taxed as a sole proprietorship, a partnership, or an S-Corp is what we'll get into. Um, yeah, and then kind of leading into S-Corp, but then I kind of let Marcus take take that side of things away. An S-Corp is just a tax status under the IRS rules, and it's not a separate business entity. It's just a usual in a usual conversational sense. It's not a business entity. It's often chose to potentially reduce self-employment tax and exposure. So I kind of let Marcus dive into that a little bit more.
Sure, absolutely. So as Jeff kind of already pointed out, the LLC as he said, a business structure. It's your legal structure, how you're set up legally.
Hmm.
The Keep in mind from that side, it's usually your LLCs, could be a LLP, meaning a partnership, as well. And then your next ladder up is Inc. So always
Hmm.
remember when you're setting up these legal on the legal side, you can always go up the ladder, but a lot of times the Secretary of States, especially in North Carolina, will not let you be a Inc. first and then come back down. They're going to make you dissolve that whole entity. Um, the other thing to keep in mind is the reason people are usually limited liability companies is also to reduce some of the overhead and some of the legal things they have to do. So if you're incorporated, you also have to have a board of directors, have board meetings, things of that nature. And a lot of times people don't want to do that, and that can jeopardize your legal status, which could then expose your assets. So that's why you'll see the majority of people being limited liability companies. Jeff already kind of hit the nail on the head. The purpose on the tax side to make that S corp election is really to divvy up your income and break it up between earned income, which has payroll taxes applied to it, or self-employment tax that Jeff mentioned, versus unearned income. So when you can divvy up some of that income and have some of it as unearned income or investment income, that lightens that tax load on the owner. So those are the
Hmm.
big 2 things we're usually looking at when we're trying to help people decide how to structure their entities for tax purposes. So that's a big
Yeah.
thing. Always keep in mind the LLC is a legal structure, and then you have to tell the IRS how you want to be taxed. So you can control that at any time. Anything else, Jeff,
Hmm.
want to add to that?
I'll just add that a lot of times, LLCs especially, I mean, they're popular for the small business owners, your side hustles. When you want the simplicity, we don't usually see the S corp or evolve into the S corp until we see income is pretty consistently strong, where we can make those type of decisions, and save you that type of money on the tax side of things. So that's the only thing. But like I said, S corps you usually evolve into that once steady profit is coming in. So.
Yeah, because what happens is, like Jeff said, if you start with the S corp, you're bringing in additional cost,
Hmm.
and we don't want you to incur those costs until it is going to be beneficial for you. So
Exactly.
keep in mind, yeah, that's why there's usually a sweet spot when we turn on that S corp. So yeah, so
Hmm.
just kind of keeping that in mind. So absolutely. So all right, well that'll wrap it up for this week. Thank you as always for tuning in, and we look forward to speaking to you next week. Again, send any ideas, any topics you'd like for us to delve down into, and we'll be more than happy to do so. So until next time, everyone have a great week. Thank you. Bye bye.